Hello to all, and welcome back to Elliott Waves on Cryptos. Another week has gone. Another week where we see our analysis being spot on. And I know that many of you might criticize, might hate the analysis, but the reality is this: it's there for educational purposes, and the more I wouldn't say follow, but the more you take it seriously, the more the chances that you're going to solve yourselves some bugs. It's been quite a good journey so far in terms of how the subjective Elliott waves can help you and anyone make more informed decisions when it comes to trading cryptos, especially. And I'm happy to continue with another weekly update. Today, we're going to have a quick look, as always, on the BTC short-term, which has been a bit challenging to chart. And also, we're going to have a look at engine, because this is what our QIC, Core Inner Cycle community, has voted for this week's poll. Do not forget, all of this is purely educational, okay, and not investment advice. If, in case you find this video helpful, thumbs up, like, subscribe, and if you are more of a serious investor, feel free to contact me on the About section. You can find my information there in order to be added to my premium Telegram channel, okay? So I'm mainly interested in people who have experience rather than the newcomers, okay? So without further ado, let's see what's happened since last time we talked and what I'm expecting to happen going forward. And one way or the other, that is going to be fairly soon. We might not even have time to go to the next video next week. Okay, let's jump to the charts and take it one step at a time. Okay guys, I want to start with BTC USD and we're going to look at the short term. Last Thursday, hold on, if I'm not mistaken, we were looking for a potential rejection up to the 48.87, and that was right spot on. And we talked about a decline in wave 3. Although this decline has not really printed an impulsive move as much as one would expect, or even who would expect, and there is a reason behind it, I still remain bearish, okay? And as long as we are in this channel that I have drew over here, you can simply take a channel, connect this and this level and this one, and you will get a guide in order to, well, guide you in terms of whether price action remains bearish or mixed or bullish. For now, we're bearish. And as long as we are inside this channel, I am bearish. Now, the reason we haven't seen these effectuating as significantly as one would have thought, especially like everybody's expecting the dump. Come on, Stavros, you're expecting a dump. Where is the dump? Well, I will tell you what. There is no way that the markets are going to go down sharp, like in one drop, although this is quite sharp, and this was quite sharp, and this was quite sharp, right? But we just didn't see fresh lows after the 20th of September or so. So the truth is that when markets are falling, we need markets they are going to give you traps, okay? Bull traps and bear traps. Those are to liquidate short-term traders that they are looking for more upside or more downside, okay? So those who look more upside will open a buy order, will put a stop loss. This stop loss has to be taken so that they're out of the market and the money goes to the exchanges, okay? It's a numbers game and a probabilities game, and if you don't understand it, well, you can join my Telegram. But you know, it's better if you just do spot long-term trading, okay? It's better. So the reason we have done a correction here, of course, in the territory of wave 1, okay, It's purely because nobody wants to just start selling straight away. Which whale you think is going to sell down here? No whale is going to sell down there. The higher the prices are going, the more the probabilities for them to sell are, well, are there. Okay, so since some selling took already place at 65, then 55, then 50, the 53, whatever that was, and the 45, slowly, as you can see, it happens in lower levels, but when we reach a high. Okay, and this is what I expected to happen here as well. So let's pull our FIBO again, go all the way down over here, and look at the 50 and the 61.8. You might wonder why I've placed my bottom over here. I will explain what I see in this structure and you will understand why. So the two levels that we need to really pay attention to, guys, are the 44.30 and the 35.32. Now, I'm not saying we cannot go higher. We can go up to 46.83 or so. This is where, well, even higher at 47.56.4, it's where my wave one is going to be invalidated. Okay, that is a big pump. Okay, and we can get it anytime soon. Look at this pump from yesterday to today. That's like 3K. Well, another 3K from where we are, and this is our top. Okay. That, of course, assumes we stay below the 47.564. Although I did say that we remain bearish inside that channel, short-term false breaks are expected. Okay, and at the end of the day, let me tell you something else. If we pull another channel, and this time actually start from the bottom, if I can do that in the logarithmic chart, hold on, look at this, and we'll go all the way up to the beginning. We have a second channel up here, right? You see that? And the reality is this: one is this acceleration channel, both are acceleration channels, but one is less accelerating. Okay, so both are there and both give a very good guide. Now, what I'm seeing from 2 all the way down is that a 5-wave move all the way to 4169, and then I see an ABC and an ABC. And that, for me, it's an irregular flat. And because we have 5 waves above the wave A, that becomes an expanded flat. That's the variation, right? Now, because we are still correcting over here, guys, and we haven't broken to fresh lows, that correction means that we have to have another corrective pattern connecting another corrective pattern. So my ABC is the W, my X is a triangle, an actual descending triangle, and I'm expecting an ABC to give me the wave Y. And this wave Y is going to complete minute wave 3. This is going to continue in 3, 4, and 5, and then we're going to get the minor wave 3, which is of the same degree as the yellow labels over here. Then we're going to get the 4th and then the 5th. Since in the longer term, if you remember, from 65K down to 20K, we got a sharp move. That means that this decline in wave C is going to be gradual and with low volumes, okay? Because low volumes in wave C are not as strong as they are in impulses. But internally, because it's wave C, our wave 3 is expected to be obviously strong, right? So we need to see a very good breakout to the downside once one of these levels surrenders, okay? Now, so my invalidation, guys, is going to be up here, okay? Now, let me get you a little bit here zoomed in, and then we're going to talk about this structure, and then we're going to look at the medium term, just as a reminder. You've seen that I've called this a triangle over here, A, B, C, D, E, and this is a descending triangle for wave X. If this is the case, we finished this triangle and we are in the last wave, okay, of this corrective, complex corrective structure. Now, we might see prices falling a bit to complete wave B down here, okay? That should not mean we are turning, okay? That should mean that we have a correction in B that is deeper. And then we continue up in wave C, okay? But in case we do break below, okay, without reaching that level, that most likely mean that we ended up here, guys. And this is my 1, and this is my 2, and we'll continue for 3, 4, and 5. But I don't think this is going to be the case, because the reality is when we have higher degree structures having smaller and shorter corrections than a lower degree structure, it's not the right look. Okay, so the higher degree structures have to have higher bigger moves, and not necessarily bigger moves, but at least the correction should not be short. Okay, now the alternative scenario here in the short term is that we are not done yet. Okay, and I will show you quickly. That is D, and we're gonna get wave E down here. Okay, so B, C, D, E. So in case we don't break below, if we come down straight down, we could get another leg up to complete the ABC in Y, if that makes sense. Yes, so it's one is that the triangle finished, the other one is the triangle has not finished. If we break lower, it means that this is multi-structural move to the downside. Now, if we look at this structure, because I said we would look at this one as well, and let me just delete this, just write down these numbers, 45,326, yeah, 45,297. I don't think that's gonna go down, but 46,832 as well, okay? Anywhere between by the case. Anyway, so this, if we add the 138.2, okay, it has to be the minus 382. You see, we come pretty much very near to where wave B is. So, and we are in crypto. This is allowed. By the way, irregular flat wave Bs do not have, I mean, they have a maximum of 1618 anyway, but nobody is actually labeling it as such. Either way, what if that was my wave 1, and this is ABC as it is now, and this is ABC, which is going to make our wave B, and that is going to be 1 and 2 and 3 and 4 and 5. That is also possible, okay? It's possible as a running flat, okay? So this running flat can make this some sort of ending diagonal. However, the problem with that is that it will most likely be a variation of the open diagonal rather than anything else. But my problem with this alternative over here is what? Is that ending diagonals have to contain zigzags, okay? And as you will see, okay, this can be the first zigzag, that's 1. This can be the second, let's say, that's 2. And then what? You've got A, B, and C for the third one. It just doesn't make sense, you see? And this is very deep to be part of an ending diagonal. And ending diagonals cannot be open, okay? They can be expanding, but not open. My wave 2 has always have to be below my wave 4 in an upside variation. So it cannot be like this, okay? Open. It's against the rules. So the other case is that what if that was A, B, and my C finished up here, and this is the running flat variation. That would make this 1 and 2, and we continue lower down, okay? So I believe there's more chances of this happening based on this ABC running flat structure rather than with this being 1 and 2. Because as you remember, this is a lower degree structure and has a quite long correction. But if we take it as part of wave 2 over here, because that would be A, B, and C, then it's pretty much, it makes a bit more sense. Okay? Now, that's all there is for BTC short term. Let me just place it back here because I think it is done. And let me go a little bit further out. We talked about all the fractals, so you should watch the previous videos if you want to take a bit more of a guidance in regarding that. Okay, now I'm expecting wave 4 to come in, guys, still. Okay, you can see this is the top trend line of an ascending channel, base channel, connecting waves 0, 1 and 2. Okay, this is the base channel. So 2150 or so, might be even lower, even higher. Maybe we're gonna false break as we did over here. We never know. But I'm expecting the lowest of the lows to be 19K. You might ask, why not up? And of course, as I said, we are gonna look at the medium term now, okay? An alternative scenario, as you well know, is that this is 1 and 2. This is 3. Well, is it 1, 2, 3, 4, and 5 probably? 3, 4, and 5. Okay, although it's very ugly. This has a diagonal structure, not an impulse to the upside. This correction is very long to be part of an impulse move to the upside. Anyway, there is a lot of don'ts than do's over here. In either case, your alternative is this A, B, and C. That means we ended and will continue higher. Or it might be W, X, and Y, which means we're going to move higher, stop around 50, and come back down to around 35, and then move all the way up. That is your bullish alternative. Just for those who dislike my videos, just for you guys, yeah, you can hope, but the reality is that this looks bearish. Okay, why? And I will repeat for the millionth time. 1, 2, 3, 4, 5. It's always followed by a 5. 5, 3, 5. It's how it works. That's your 3 and 1, 2, 3, 4, 5. Okay? Now some might come and say, well, look, I've got ABC here, and then this is another ABC, and X, and this is Y. And then, you know, we continue up, but how is this a W, X, and Y? It's a forced pattern. It's a forced structure. We do not structure based on hope or based on CT and Twitter, okay? We are professional analysts and we're doing the best we can to help you guys. It's up to you if you want to listen or not, okay? Anyway, that's it for BTC. Let's jump on engine. I don't have much to talk about when it comes to engine. We are on the 4 hour. Let me just go maybe on the daily just to show you the idea here. I didn't even change this pretty much nothing, okay? I've made very minor changes, so it's been going as we expected. If we connect over here and we actually do a base channel, okay, you are easily able to see that, visualize that this is still, you know, correcting, and we have actually ended the base channel again. So although when we enter the base channel there is risk of going all the way down to the bottom, like that's around the 50 cents or so, I don't think that's going to be the case for engine. I think we are going to get another drop if BTC falls, of course, but I think that's going to be roughly at the previous bottom, okay? So we're talking about around the 70 cents or so, okay? That has to stay above the 66, 67, actually, to support really the bullish bias and bullish case, let's just say, okay? As many levels as we can hold, you know, the better, because the next level down is the 26 and nobody wants to see that. Actually, many would love it, but obviously not those who are holding. So what is the structure over here? We are looking at a move up in wave 3, okay? And it's still very early for engine. If we take this structure in mind, we'll have wave 3, we'll have 4 and 5, yeah? And then we'll have the primary 3, the 4th and the 5. And we've done what over here? 4. So if I told you 20, would you think I'm crazy? But we're talking long term. Well, I don't like saying mark my words, but just to keep this price in mind, okay? Now, over here, we are looking at wave 3, We are in 4. We're actually in C of 4 of 3. Okay, we identified an expanded flat over here the other day. Actually, this is not an expanded flat, it's a regular flat, excuse me. And it seems that it have worked out fairly well. Okay, this is an ABC. This is well, actually, this is a no. This is an ABC. This is an ABC. This is 1, 2, 3, 4, 5. A flat is a 3, 3, 5 structure, guys. Okay, and we have that in here. Now, this flat is part of wave B of 4. The A was done in a 5-wave manner. The B was done in a 335 correction, which is considered as a 3. So my wave C, as I said on the BTC 5, 3, 5, A, B, C. My wave C has to be a 5-wave structure, okay? So, if that's going to be the case, there is 2 things we can do. First, to get a guideline, and second, to get some targets. First is the channel. We'll start from 0, we'll go to the correction, and we'll go to the first leg down. So this is your guide for now, okay? That, by the way, looks like it's multi-structural here. So that's my wave 1, okay? That probably we're gonna get wave 2 and then 3, 4, and 5. This is what it looks like to me so far. Why? Because we have 5 waves down here. We have an increasing volume and candle over here, which is usually part of wave 3. But if this is 1 and this is 2, this 3 is going to have higher volumes, okay? And it's going to drop better. And then we're gonna get the 3 and the 4. Just don't forget it's a wave C, not a wave 3. I mean, at least we want to hope, right? Because if that was 1, 2, 3, 4, and 5, oh my God, that's going to be very bad. But I doubt this is the case, guys. I'm not a non-believer. I'm a believer in blockchain, in coins, and engine, and everything. It's just that I see them as investment. Many people are emotionally attached to coins, and this is the worst thing you can do to yourself because you're losing money. You're leaving money on the table. Anyway. So the channel is one scenario here that we're looking. So we'll be looking at support around this level, then around this level, and then around this level. You know the drill. Now, what else we can do? This is the ABC. We are going to use the guideline that waves A and C are usually equal. Okay, so that is going to bring us down to 43 cents, guys. Okay, it's a guideline. It doesn't need to happen. The next level up is the 61, and before that is the 81. So the 81 is very likely to happen because we need a fresh low below this level to consider this as a complete structure, right? So that will be, the 73 will be the low, the 61 will be the lowest of lows in my opinion, okay? The lowest of lows, as I said, BTC 19, the lowest of lows, I'm saying 61, the lowest of lows for engine. Although with a pinch of salt, this one, okay? Look also at the 50. So now I'm pretty sure that some of you want to really see how did I talk about this 20K thing, $20 thing? Well, let me show you this. Although I cannot go all the way down, I'm just going to use now the 3 and the current 4. The current 4, okay? Now, a first level to take into account is always the 38.2 extension, then the 61 extension, then the 100 extension, and then the 161 extension. Obviously, we're not talking about these numbers. This is crazy. But look at this. Once we finish, let's assume, guys, that we're going to go down to 66, as we said, right? Then let's assume we're going to go there for now. So your next level up is the previous high at 423. And then we'll go up to 13. You understand that? And that is going to be my 5, my 3, we're going to get my 4, whatever. My 5 is going to be around 13. That's only the 3. You understand? And then we'll get the 4, and then we'll get the 5. And the 5 could literally, well, I don't want to go up there, but that would be crazy. But you see how these numbers are working out, okay? Now, on a different note, we can have our 5 completed at the 200 Fibo. Okay, and where is the 200 Fibo? I think I didn't click it correctly. Yeah, there we go. Look at where it comes, at 22. You see? So this is pretty much my wave 4 equaling to wave 5. I'm not saying minor 5 is going to go to 22. No, this is not what I'm saying. But I'm saying that that target is realistic, whether some of you believe it or not. In the long term, I repeat, in the long term. Okay. So guys, I hope that has been a good ride for now. Actually, let me just give you an alternative. What else can happen here, really? Well, look at this. We have two lows here. Yeah. And we have, let me clear this space a bit. When we have two lows like this, we can go ahead and draw a trend line, which means on the top we can do the same. But that looks not really as a nice shape. So what else we can do, and what I do actually, I mean, it's up to you whether you want to do it or not. I'm measuring the angle of this trend, okay? And when I see this, and this is at 7, I'm using the same angle for a potential triangle here. Okay, so there is two things we can do. Obviously, that will have to go up here and become a -7. Come on, give me the 7. There we go. Which means I can come over here and do this. Yeah, but that would be a case where that's going to go up. It will be A, B, C, D, E. Means we're going to be here for months and then we'll move up. But what else I'm doing also is I'm using the 7 and I'm going over here. Because we could have something like already in place. Because my wave A for triangles can be a bit more extended. It doesn't need to be a straight line here. That means this is ABC, as I have now. We're going to get ABC. We're going to stop over here. We're going to get ABC, ABC. And then once we get there, we're going to move all the way up. There is one concern I have about this. It really extends the correction time, the longevity of the correction in wave 4. And my wave 4 is already lasting a bit too much, you know? I mean, if we compare it to 2 of the same cycle, we did 122 days. Okay, if we take that high over here, only so far, we have done 175 days. You know what I mean? So it's not something that I would really, you know, want to see. Now, let's do this. This is about, you know, it gets a bit of too far, you know, if you know what I mean. So if we use the 1.62 Fibonacci extension over here, will get us to like 197 days, okay? 197 days, or let's say here, it get us to around a low on the 24th of October, 161.8, because we can use, you know, the Fibonacci extensions vertically and also horizontally, right? Things are not just moving one way. There is price and there is time on the charts, but everybody is focusing on the price. So that's the 161 extension, right? Around the end of December or of October, okay? So it would be acceptable, but if we are to see a triangle here, then that would go and it would extend probably to 618. Okay, and that will take us 319 days. So we'll probably go, what was it, 319? 319, yeah, well, that was close. There you go. We'll probably go like end of February next year to have this correction done, which I don't think is going to be the case. We never know the truth, okay? We are here to look at the structure, understand it, and modify it in case needed. It's all for our own benefit. Use Elliott Waves as a tool, or come join me in my Telegram premium group, and you are going to be able to not just educate yourself, but also prepare for a dump or for a bump. Thank you for watching, and we'll be again here next Thursday.